Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers were active at that 0775 support, and for the most part, the market has been balancing between the pre-market support zone and the pre-market resistance area. And at this point, technically, the market can break in either direction from this narrow overnight range. So we do have to be flexible and nimble with our bias off the open. The larger time frame bias continues to be bullish. So if anything, we should still be giving more edge to the buy side and be a little bit more careful on shorting the market, just because that larger time frame bias continues to be fairly bullish. And if the Russell starts to put in a catch-up move to the upside, then we can still get upside movement in the S&P as well. So we already know that there has been a pretty notable negative divergence between the Russell and the S&P, and the Russell has been relatively weak. That theme still continues to be in play, but at the same time, Russell is heading into some better support and could find some stability, which means that even though in the short run ES can head lower, the downside potential may not be really all that huge, and it can actually find support at oh 06 to oh 08 and 99.5 to oh 02. So off the open, it could be a very two-sided market, and we know that it can break in either direction. But unless we're seeing very clear-cut signs of rejection, failure, and the other markets also displaying some weakness, it's going to be better to be a little bit more cautious on the short side. And as long as we're not seeing any clear signs of weakness, it would still be better to be more focused on a upside move. On the upside, a break above 16.5 to 18.5 would bring the 2021 high volume node into play. That is a potential area of resistance first time up. Beyond that, we have resistance at 23.75 to 24.75, and then really the primary resistance on the upside is 26.75 to 28.75. So in the event that we do get a decent breakout above the pre-market resistance zone, and we're doing that on broad market strength where the other markets are also gaining some ground to the upside and Russell is putting in an upside catch-up move, then there is potential for ES to go back up and test that 26.75 to 28.75 area. But that would only happen if we were seeing some decent underlying momentum and strength across the board. And then beyond that, we have resistance at 30.75 to 31.75, and of course the recent high at 34.25. But for now, the focus really is on the 16.5 to 18.5 area. I think it's going to help us determine the short-term bias right off the open, and then how the market deals with that 2021 high volume node is really going to set the tone for the day. If we slice right through 2021, then that would be a confirmation that the buyers are in pretty firm control, and we could be heading up to 26.75 to 28.75. If we swiftly reject 2021 and then start trading below 16.5 to 18.5 again, that would be a signal of continued weakness, and then we could actually head lower. 12 to 13.25 is short-term support off the open, so if we're holding above that, that would just tell us that the market is continuing to balance within the overnight range. Below 2012, we have the gap fill at 08.5, and then the support 06 to 08. That is still an area that can be defended by the buyers, but just keep in mind that we've already seen a reaction off that zone in the overnight session. So at this point, heading into that zone, if the Russell is breaking yesterday's lows, then 06 to 08 could end up being not the best spot to engage on the long side. So that's something we'll have to really gauge off the open, see how much weakness we're seeing across the board, and ideally you don't want to see a very negative AD line as you go into 06 to 08. And ideally, if AD is actually holding above zero as 0608 is being tested, then that would be a better setup on the long side. Below 06 to 08, the 99.5 to 02 area marks the breakout from last week, and that's still an area where responsive buyers can be active, and that can still provide a nice long setup, especially if the Russell is not completely liquidating and we're not in a liquidation type environment. Then 99.5 to 02 can even be a reversal spot for a move back up to 0608 and then back up to the 12 to 14 area. So that 99.5 to 02 is a very key support zone, and in most scenarios, it's an automatic long on first test. So that's the environment that we're in. The overall bias still continues to be bullish, even though we saw a short-term 3 to 4 day balance breakdown yesterday. It doesn't really change the overall uptrend that this market has been in, and TF has been weak throughout this entire process. So that's not, even though it's a red flag overall, it's not such a big weight on the market that it doesn't really justify aggressively shorting the market at low prices. As long as you're getting good location, there can still be short setups intraday, right? Depending on how the day is setting up. But the overall bias continues to be bullish, and for that reason, it still makes sense to be a little bit more conservative on the short side and still be a little bit more aggressive on the long side. So those are the main thoughts heading into the open. Let's see if the buy side can maintain control from this overnight range, and we'll take it from there.